Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. Market Analysis and Tech Stock Trends for May 26, 2026. This video presents a direct informational narration of the source document.
Our agenda covers 6 key areas: geopolitics and macro, economic data, tech earnings, the S&P and small caps, crypto and gold divergence, and finally, sector rallies.
Section 1. Geopolitics and Macro.
Looking at Tuesday's timeline, we observed simultaneous and conflicting developments. We had reports of US-Iran negotiation progress aimed at reopening the Strait of Hormuz. However, on that exact same day, the US conducted airstrikes on Iranian missile sites. Alongside this, there is the ongoing Israeli ground offensive in Lebanon, coupled with ongoing Iranian condemnation of US actions.
Market indicators show a mixed response to these geopolitical events. Euro and Asian markets experienced pullbacks following a Monday surge. In the US, the S&P and Nasdaq were up, though the Dow was dragged down by specific sectors. WTI crude oil saw an overall decline, but experienced heightened intraday volatility. Meanwhile, real yields have fallen below 4.5%, driven by cooling inflation expectations.
Section 2. Economic Data.
We have a highly concentrated data block coming up on Thursday between 8:30 and 10 a.m. This window includes the Q1 GDP revision, April core PCE, durable goods, and jobless claims. When you combine this dense data drop with a short trading week and lower summer liquidity, the resulting impact is an increased probability of heightened market volatility and sharp price swings.
Section 3. Tech Earnings. Here is what is being heavily scrutinized for upcoming earnings. For Salesforce, the focus is strictly on the AI adoption rate, large order conversions, and sales cycles. For Snowflake, it's cloud data warehouse efficiency and AI-driven consumption. Marvell is being evaluated on custom AI chips, data center interconnects, and its broader ecosystem. Dell Tech's focal points are enterprise IT spending, AI server momentum, and overall tech investment. Finally, for Costco, focus shifts to gross margins, pricing power, and resistance to macro cost pressures. Section 4. S&P and small caps.
The S&P 500 remains securely above the 7,500 level, with bullish positioning densely clustered between 7,600 and 7,700. The market is currently in a positive gamma regime which structurally suppresses volatility. We are seeing strong AI optimism. JP Morgan targets 9,000 points, and Morgan Stanley notes an unstoppable compute arms race. However, there is institutional caution at play, evidenced by simultaneous defensive hedging in derivative markets.
Comparing specific segments, small-cap stocks are showing signs of strengthening by breaking their May highs, with options flow targeting the 300 level. A breakout here indicates a broadening of risk appetite. On the other hand, the semiconductor sector index surged 5.53%, heavily outperforming the broader market. This demonstrates continuous capital cycling straight back into hardware.
Section 5. Crypto and gold divergence.
In the crypto space, Bitcoin's volatility has hit a 9-month low. We've seen $1 billion in net outflows from spot ETFs in May. It is trading in the $76,000 to $77,000 range, which is down 40% from its October peak of $126,000. Notably, mega-cap tech stocks like Nvidia, Microsoft, and Amazon are underperforming. Additionally, the mid-June SpaceX IPO is expected to drain market liquidity even further.
Looking at gold, it faces key technical levels. A firm hold above resistance at $4,595 could attract trend-following capital. Conversely, a break below the support level of $4,500 could shift market sentiment toward caution.
Section 6. Sector Rallies.
Let's look at specific sector momentum. Micron Technology surged over 19%, its largest jump since 2011, pushing its market capitalization past $1 trillion. Its year-to-date gain has hit 244%. With storage constraints projected to persist beyond 2026, Wall Street targets a $1,600 price, implying a $1.8 trillion valuation.
There is also intense speculation in the space sector. MNTS surged 140% despite announcing a $200 million stock offering that actually exceeds its existing $155 million market cap. Meanwhile, LUNR dropped 9% after losing a phase of a $440 million NASA contract, though it still retains a 115% year-to-date gain.
Regarding Food 2 holdings, the outlook from S&P Global Ratings projects greater than 65% revenue growth in 2025. This is driven by overseas expansion, which is mitigating mainland regulatory impacts.
This brings us to a final question based on the source data. With capital aggressively backing tech growth and speculative space stocks, while simultaneously building defensive hedges, is this market broadening out healthily or merely concentrating risk?